Hello, this is Martin Weiss, and I want to welcome you to the first in our series of 6 podcasts with my special guest, Money and Markets Technology Specialist, Jon Markman. As you know, I'm a perennial skeptic. I'm always very conscious of the downside. So my role here is to be your advocate, to ask the probing questions you've been asking, to hold Jon's feet to the fire, to get reliable, well thought out answers. And in each installment of this series, Jon is going to answer our questions. After each installment, Jon will be available to keep the discussion going with you on the Money and Markets blog. Welcome, Jon. My first question is the most obvious one. Why Jon Markman?
Sure, I was a reporter and editor at the Los Angeles Times for about a dozen years, reporting on transportation and city government,
Mhm.
all kinds of investigations. But my dad died in 1994, and I had to take over his portfolio, and I didn't know that much about stocks other than the fact that they had helped make him a relatively wealthy individual. So started to study. I started to study them. I started to study them with a lot of interest at first, and then it became an obsession. And pretty soon, I asked the business section to let me write a column about strategies, and I've literally been writing that same column for the last 20 years. I was on a staff that won Pulitzer Prizes at the LA Times for spot news reporting in 1992 and 94.
Pulitzer
They,
Prizes.
one was for the Rodney King riots, and the other for the LA earthquake.
Uh-huh.
So those kinds of events really help you train you to be an investor because you have to be able to think on your feet
Mhm.
and work very quickly with other people. I won a Sigma Delta Chi
Mhm.
Best in Journalism Award for the work that I did in helping people understand
Mhm.
how to invest in a post 9/11 environment.
Ah.
I also won a Gerald Loeb Award in 2007 for a series of columns that I wrote about the S&P 500.
Well, so that's actually a more prestigious award than anything else in the field, right?
Yeah, the Gerald Loeb Award is essentially the Pulitzer for business journalists. There's no business award within the Pulitzer. So when you win a Loeb Award, it means you've really attained the highest honor that you can get as a business reporter.
Congratulations, Jon, on that. So after LA Times, right?
hmm
Where'd you go from there?
Well, around 1997, the internet was just breaking onto the scene, and Microsoft called me up one day out of the blue and asked me to come help them start the revolution up there in the internet. And I helped them launch MSN Money, and I was the managing editor of that website for the next 6 years.
Why do you think they called you? I
Yeah,
mean, what?
sure. Great question. Well, they had a consultant who looked at all the journalists working in business news around the country, and they thought that my focus on strategies would and my the writing that I had done about technology would be a good fit for them.
Wow. Okay. How did that go? I mean, what did you find from that experience that might apply to today?
Well, I was an outsider, as a journalist, and I came into the belly of the beast, which is a software company, and it really helped me understand exactly how big software companies work. From the inside, I learned how software is created, how it's thought about, how it interacts, how program managers, product developers, testers, and developers all work together to create the kind of products that you see. And I helped create many features and products that people continue to use today.
For example?
Well, I in 2001, after the great tech wreck,
Hmm.
I realized that people would become very disenamored with investment analysts, and I thought that Microsoft could use its engineering expertise to develop the first stock rating system that had since Value Line in the 1950s. So I wrote a white paper, and it was accepted by my group, and I went out and created the first stock rating system. As I said, since Value Line, we launched that stock rating system, which is called Stock Scouter,
Oh yeah, I
in
remember that name very well.
in 2001, and it's been operating continuously on the website ever since, beating the market by an average of by 5 to 1 in the process.
Sounds like our Weiss stock ratings. A very similar track record. Congratulations.
Well, thank you.
Yeah.
And the thing is that once the stocks got going, and an organization that had helped me develop it asked me to help them create a hedge fund based on those on the ratings.
Uh-huh.
And so I did that. I left Microsoft in 2002 and started this hedge fund. And I worked for that organization for about the next 3 years until going off and starting off on my own.
So do you still use kind of the same system, or have you refined it further, or how does that?
When you have a good system, you don't want to change it too much because it, the results that you've had in the beginning, if you have a robust system, should persist for a long time. And although there's been slight tweaks to the system since it was created in 2001, um, I have been using that same methodology ever since.
Your focus is technology stocks. Could you tell us a little bit about that?
Yeah, and I really like, there's lots of investors and advisors who help people avoid risks,
Hmm.
who help people be conservative with their money and focus on dividends. And that's not my specialty. My specialty is helping people take smart risks responsibly.
Hmm.
So I've discovered that the sweet spot for buying technology stocks is uh, about uh, is about 3 months to a year after their IPO, when they're still young, they're still not very well known, and yet they have a long growth path ahead of them.
Well, could you give us some examples of some tech stocks that you've been looking at or recommending recently, and how well they've done?
Well, sure. There's a company called Splunk. Funny name, SPLUNK. Symbol is SPLK, and it came public in the middle of 2012. There was quite a bit of fanfare about it. It came public at around 25 if you bought it before the IPO, or 50 if you bought it the first day of the IPO.
Uh-huh.
And this was the first time most people had ever heard of the term big data. Big data is what Splunk helps companies organize and analyze. And the stock, although it had traded up to 50 on that first day, went up to around 60, came back to 50, went up to 60 again, came back to 50, and I recommended people buying it at 50. And it's almost tripled since then.
Wow, fantastic. And that's just one example. I guess you have others we can talk about in another podcast. But for now, let me just say thank you very much for this very frank and intriguing timeline going back, a couple of decades. I'm very impressed. And actually, John, that's why I invited you to join us to begin with. I think our listeners are going to be impressed as well. But our listeners have asked a lot more tough questions which go beyond you personally, about the dangers in the tech sector, about difficulties they see in picking the right ones and getting the timing right, and a lot more. So I hope you can give us equally good answers to each of those questions, which we'll be asking in the next podcast.
Well, investing is all about the future, and the future is inherently unknown.
Right.
But by applying some, time-honored principles of math and
Mm.
fundamental analysis and common sense, I really think that people can take more risk in young growth stocks than they realize. At the end of the day, Martin, it's all about buying low and selling high. And my experience as a journalist and strategist and trader helps me understand and communicate the difference between them.
Well, I appreciate that, and I look forward to talking to you again. Now, John, hold there for a second. I just want to address our listeners. Over the past several weeks, both in emails and in the Money Markets blog, you've asked John to name some of his best picks, and John has agreed to do that. He's selected the day for making that announcement, which is Tuesday, April 8th. John will come to our headquarters here in Florida, where we'll hold a special video conference in our studios. He'll give us a play-by-play scenario of the most powerful, most sustainable technological megatrends in the world today. He'll name the leading companies in each of those fields, and then he's going to announce some of his picks. So please join us at that time, and it's going to be 2 p.m. Eastern Time, April 8th. Registration is open now. Just click on the button below. John, thank you again for joining us today.
Thanks for having me.
This is Martin Weiss with Jon Markman. We'll see you here again Thursday.